The U.S. markets are currently closed for the weekend. Recursion Pharmaceuticals, ticker RXRX, finished Friday's trading session on October 17, 2025, under intense pressure, closing at $5.86 per share. That was a significant drop of 50 cents, representing a 7.86% loss for the day. Now, looking at that kind of steep decline, the immediate assumption for many is that this is just another high-risk, non-profitable biotech stock getting hammered in a risk-off market, where high interest rates are punishing any company that isn't generating immediate profit. That is certainly a major factor, but the reality of this 7.86% slide is much more specific to Recursion. This move signals a growing and palpable impatience from the market. It's a clear sign that investors are beginning to agonize over the timeline. The incredible excitement over its high-profile partnerships, especially the one with Nvidia stock, is colliding with the hard, cold reality of clinical trial duration and the massive, ongoing cash burn required to fund this operation. This isn't just broad sector weakness. This is a specific test of faith in Recursion's very complex, tech-forward story. For the last couple of years, the prevailing belief surrounding Recursion has been compelling and straightforward. This company is using cutting-edge artificial intelligence and machine learning to fundamentally change drug discovery. The expectation that has been sold to the market is that by running millions of automated cellular experiments and analyzing the resulting images with AI, they can find treatments for rare diseases, fibrosis, and cancer at a speed that traditional pharmaceutical companies simply cannot match. This narrative has successfully made RXRX feel less like a biotech stock and more like a tech stock, perhaps misplaced in the volatile healthcare sector. You might look at your portfolio, see high flyers like Tesla stock or Apple stock, and be tempted to place Recursion in that same category of high-growth disruption. Many investors, whether they are self-investing through Robinhood or using a SoFi Invest account, bought into this core idea. AI shortens the timeline from the laboratory to the pharmacy. This is a key detail for anyone involved in online investing. They might be using a platform for SoFi investing or checking SoFi stocks and SoFi ETFs, but they are missing the biological bottleneck. The Robinhood stock trading platform might make buying Robinhood fractional shares easy, but it doesn't explain the clinical trial process. But here is the critical distinction, the reality that the market is finally and painfully grappling with right now. Recursion's AI platform, the Recursion OS, is exceptionally good at one thing: generating potential drug candidates. It identifies biological relationships and potential compounds at a staggering rate. But that discovery phase is only the very, very beginning. The AI doesn't bypass the human bottleneck, the multi-year, multi-billion-dollar gauntlet of Phase 1, Phase 2, and Phase 3 clinical trials required by the FDA. The market is waking up to the fact that an AI-discovered drug doesn't get a faster path to approval. It still faces the same brutal 90%+ failure rate in human trials as a conventionally discovered drug. That 7.86% drop to $5.86 is the physical manifestation of the market's anxiety that the shortcut part of the story is still frustratingly distant. Let's break down the recent trading dynamics that led to this 586 close. Friday's volume was extremely high, coming in at over 70 million shares, which is significantly higher than its daily average. This wasn't a low-volume, sleepy drift downward. It was active, decisive, and heavy selling. This kind of volume on a sharp down day signals that institutional players, not just retail traders on the Robinhood app looking at their Robinhood Investments or Robinhood Crypto are actively trimming or closing out their positions. When you see heavy volume backing up a price drop, it suggests conviction. This wasn't a fat finger trade, it was a widespread reevaluation of the stock's near-term worth. We also have to look at the broader biotech sector, often tracked by the XBI index. The entire sector has been under severe pressure. Why? Because the cost of capital is high. Biotech companies like Recursion are, by definition, an investment in a future, uncertain cash flow. They don't make profits now, they spend hundreds of millions of dollars on research and development, hoping for a massive payday years down the line. When interest rates are high, the discount rate applied to those theoretical future profits gets much higher, which in turn makes them worth far less in today's terms. It's the same macroeconomic force that can pressure even a giant like Apple stock, despite its massive profits, but it's an existential threat to pre-profit companies. For many people just starting with online investing or looking to invest online, this is a harsh lesson. They might be using investing sites or perhaps an automated service like an intelligent portfolio from a provider, maybe even Schwab Intelligent Portfolios, and they see everything in the red. But for a company like RXRX, this macro pressure is amplified. Every dollar they burn on R&D is a dollar that's harder and more expensive to replace in a tight credit market. We've seen some large, long-term funds maintain their positions, but the fast capital, the hedge funds that were playing the AI hype, seem to be moving on. They are looking for safety, perhaps in boring old Fidelity mutual funds or stable blue chips, not in speculative growth stories. For many people just starting with online investing or looking to invest online, this is a harsh lesson. They might be using investing sites or perhaps an automated service like an intelligent portfolio from a provider, maybe even Schwab Intelligent Portfolios, and they see everything in the red. But for a company like RXRX, this macro pressure is amplified. Every dollar they burn on R&D is a dollar that's harder and more expensive to replace in a tight credit market. We've seen some large, long-term funds maintain their positions, but the fast capital, the hedge funds that were playing the AI hype, seem to be moving on. They are looking for safety, perhaps in boring old Fidelity mutual funds or stable blue chips, not in speculative growth stories. The Fidelity investments in this stock are being tested, and Friday's action shows many are failing that test. This is why having a robust Fidelity trading platform or an interactive broker's setup is crucial. You need to see the level 2 data to understand if the selling is broad-based or from a single large block. Using a basic Fidelity mobile app might not give you the full picture. An interactive broker's platform or a high-end SoFi trading platform can offer more depth for interactive broker stock trading. So, what does Recursion actually do? It's important to be clear on this, as it's not a traditional drug company. Recursion describes itself as a clinical-stage TechBio company. At its heart is the Recursion OS operating system. Think of it like a massive automated factory for biological experiments. It uses robots to treat millions of human cell samples with different compounds, and then uses high-resolution cameras and machine learning to analyze the images of those cells. The AI looks for changes. Is a diseased cell starting to look healthy again? This phenomics approach allows them to screen compounds and biological relationships at a scale that is physically impossible for human scientists. Their business model relies on this platform in two main ways. First, they use it to discover their own drug candidates for diseases, focusing heavily on rare genetic conditions and oncology. This is their internal pipeline. Second, they partner with pharmaceutical giants like Bayer and Roche, who pay Recursion to use the OS to find candidates for their specific targets. This second part provides them with upfront cash and milestone payments, which helps fund the incredibly expensive development of the first part. This is not a SoFi active investing play where you're looking for a quick dividend. This is a venture capital style bet placed placed in the public markets. People managing their Fidelity IRAs or using Fidelity Wealth Management Services need to understand this is not a set-it-and-forget-it holding. The stock's history reflects this perfectly. It saw a massive euphoric spike in mid-2023 when Nvidia stock was at its peak hype, and Nvidia itself announced a $50 million investment in the company, not just as a partner but as an equity holder, to help build out Recursion's BioHive supercomputer. That was the absolute peak of the expectation. The reality ever since then has been the long, slow, and expensive work of pushing the candidates discovered by that supercomputer through the grueling Phase 1 and Phase 2 trials. Looking forward, the path for RXRX stock is volatile and almost certainly binary. The central tension remains: the expectation of an AI-driven shortcut versus the reality of the biological and regulatory timeline. The primary risk is and always has been cash. Recursion burns a significant amount of cash every single quarter to fund its massive R&D operations. Its Q2 2025 results, for example, showed a net loss of $100